Welcome to the Movers and Shakers podcast, where real students are doing real deals in the world of multifamily real estate. I'm Vince Gethings, the owner of the Will Profits Academy. Listen in as we dive into the journeys of driven individuals who are turning their dreams into reality. These people are just like you, taking action and making things happen. If you enjoy the show, please like, subscribe, and if you're ready to take action, check us out at wheelwellprofits.com to learn more about our incredible community. Let's get started.
Hello and welcome to the Movers and Shakers podcast. My name is Gino Barbaro, co-founder of Jake and Gino, multifamily investor, educator, father, and mentor. Today's guest is Lane Babin. Before investing in real estate, Lane spent 17 years working as an environmental consultant and project manager. In 2021, he shifted to full-time real estate investing, and in a short 3 years, he has built a portfolio of 55 single-family rentals. And expanded into taking on a GP role overseeing $1 million in renovation projected for a 77-unit property. Welcome to the show, Mr. Lane. How are we doing, brother?
Thank you so much, Gino. Appreciate that warm welcome. I'm doing wonderful and excited to be here and discuss the real estate with you.
All right, let's get the, as Jake likes to say, the engine going over here. Why real estate? What drew you to real estate?
You know, it fell in my lap, I think. I remember this moment, 2017-ish, bathing my 1-year-old daughter, saw a friend had just wholesaled a single family property and made some money. It posted something about it. And I looked into it a little bit more and said, man, there's something here. I've always watched these DIY network shows, right? The thing that everybody sees on TV. Said, I feel like I could do that. Dove right into reading Rich Dad Poor Dad and just poof, my mind changed. Everything changed. Went into 5 months of listening to every book, every podcast. I actually listened to, I believe it was a Bigger Pockets podcast with you and Jake on it, and fell in love with the idea of going create something from real estate.
Lane, when you say your mindset changed, everything changed, what changed?
The perspective that I was doing it wrong, I thought, after all these years. Working hard, went to college, got a degree in a pretty stressful job at times, trying to work harder for my family, for my job, to get a promotion, to get more stress, to make someone else wealthy. And I said, there's got to be a better way after listening to Rich Dad Poor Dad, and just started shifting gears and said, I need to go find a way to create value and reward my family and set my family up for a better future.
When I read Secrets of the Millionaire Mind in 2008, at a seminal epiphany moment like you did, my emotions were one of rage, one of anger, one of disappointment in myself. I had all the emotions. What were the emotions for you watching your daughter, bathing your daughter, and sitting there and going, I've been doing it wrong all this time?
I had similar feelings, and it's kind of the FOMO, fear of missing out. And then it kind of turned into get there itis. Thinking, man, I would have just started doing this 15 years ago. Where would I be now? And that was a very tough belief or mindset to shake. I struggled with it for a while, trying to compare myself to everyone else and everyone else's path, everyone else's story, where they were in their real estate journey or their other entrepreneurial journey. And it took me a couple of years of doing this real estate gigs on the side, morning, nights, and weekends around my W-2 to really start to understand that I'm looking back at what I did after a few years thinking, wow, I've done something. Let's just keep doing it. Just worry about what you're doing. Keep your head down. Go do hard work. Create the value and build something.
Mm-hmm. And when you talk to your wife about it, I remember speaking to my wife, and I was passionate in 2008. I needed a way out. I just felt like I was trapped in the restaurant. And sort of like you, I was building wealth for myself, but it was a job, a small business that turned into a job. 1 week I did well. The next week I didn't get paid. Then the next week I did great. And I was on the hamster wheel of small business and not creating wealth. And I felt trapped. And I literally went to my wife, Julia, and I said, Julia, I've got to find something else. This is not working for me. And she was pretty supportive of me, and she knew the pain that I was going through. She says, whatever you need. And that is all that I needed from her to say, okay, I'm locked in. I'm going to start joining mentorships. I'm going to start educating myself. My family was not really on board. Family, they had the restaurant. They knew real estate, but they're like, you've got to stay here. You've got to work in this restaurant thing. What did your family think once you'd mentioned it to them?
Man, so I very, very distinctly remember the moment and the conversation and the setting for the conversation. After I had been listening to books and podcasts, literally would walk around every available moment I had in the day. I had earbuds in, I was cutting grass, I was working in our home garden, I was doing stuff with our daughter, I was doing stuff with my wife, we were driving somewhere, always had earbuds in. Finally, she's like, what are you doing? What are you listening to all the time? And I distinctly remember sitting on the floor with my wife in our daughter's nursery. We were literally basically crying because I'm like, I want to start buying real estate. And she's always trusted me with everything we've done. But she looked at me and said, you are not draining our life savings to go buy some rent houses. And so I said, okay, I've got to find another way. And I was a big-time fisherman, owned a boat, free and clear. I said, I'm going to sell a boat and take that cash and go start buying real estate. And so a week later, I had it up for sale, sold it, got some seed money, and dove in. Never stopped.
Where there's a will, there's a way. That is his baby. That is his boat. That is his dream. And if I always say this to people, it's never about the time or about the money, because there's always time in your schedule if it's really that important to you, and there's always a way to find some kind of money. When you did that, do you remember your first deal that you did? What would that first deal look like for you?
Oh, absolutely. Actually started with a partner, a friend of mine that I mentioned what I was looking to do and said, man, I've got some seed capital. We're good friends. We decided to start a partnership at the time, and we bought our first property. We ended up moving a house, which I'll never do again. But, we made $30-something thousand and split the profit, and it was great. It took some time. We were out there with sprayers and rollers and doing some of the work ourselves before we knew better. And I still remember that deal like it was yesterday.
And what did your wife say? Did you actually show her and tell her, hey, I made 30 G's on this bad boy?
It took a bit. It took a little bit for her to start seeing the momentum. She started seeing how serious I was. I started waking up at 3 o'clock in the morning, and instead of watching the news and wasting time before work, I was diving into evaluating property and following up on leads and running numbers and lining up materials for our next property that we were doing in the single family space. I would have lunch breaks. I would make phone calls then. I would get off of work. I would go and look at properties every single day till it got dark. And she started seeing the pattern. I was just consistent with it. I was stubborn and hard-headed because anything I do, I'm diving all in 100%. And she started to understand it. And she started to really see that this was now a passion. This was something I really wanted to do long-term. And we started talking about, how do I make a transition? Can I make a transition to this full-time? And, is it right for our family? It took a little bit of time, but we got there.
If something's really important to you and you don't know how to convey it to your significant other or a spouse, actions speak a lot louder than words. Start showing them that you're serious. Start doing a lot of homework. Start calling brokers, start negotiating deals, start buying deals, start educating yourself, start doing things that shows your spouse or significant other that you've invested time and effort. And you're not going to go out and drain the savings and try to do this get rich quick real estate thing. That's not what we're talking about. We're talking about really investing in yourself and investing in the business. Now, Lane, you were continuing to buy single families. What was the strategy? Were you buying them, flipping them, or holding them and renting them out?
So I still do the single family to this day. I've got some multifamily in my portfolio as well, but still doing the single family. I am more of a buy and hold person. I look at, wow, I've got this great little asset here that I've got some good equity in. I can put a renter in it, and I could sell it today. It might make $40,000, $50,000, but if I just hold it 10 years, how much equity am I going to have in it then? I'm going to let that renter pay it down, and I just keep stacking these little equity cash cows that at some point down the line, it's going to be time to start cashing them in, trade up for other assets, or just let some of them pay themselves off and have great cash flow at that point.
What I love is there is no one size fits all. In 10 years, Lane's going to look back and go, I can sell some of these on seller financing. And there's his mailbox money. There's his retirement money. So if you hear somebody say you need to do it this way, there is no one right way fits all. Markets are different. Investor sentiments are different. Investor goals are different. So if somebody's out there to say this is the right way to do it, no right way. There is the right framework though. Buy right, manage right, and finance right. What does that mean? What does that framework mean to you? And how has it helped you scale into buying more deals properly and even getting into multifamily?
Right. So I think this is something that's always changing for every person. It changes a little bit. Everyone's box, I feel, is unique. Because what fits for me, what makes me feel comfortable, because ultimately everybody does what they want to do in life on how they feel and how it makes them feel. And so we're going to continue to adjust the things that we buy as assets because or with our times, with our emotions, how our lives are changing. Life is changing. So, when I first started and I was buying a single family, I was buying some of the lower end properties because they were cheap. They were easy to get to. I could make them cash flow. But those aren't my thing these days. I will wholesale those these days. I just don't want to own any more of those assets. I've got a couple left in the portfolio, but I'm going to a much more nicer middle class neighborhood, brick on slab that we can go in and do some updating for the single family. And that's a much more attractive thing to me. I can have some equity. I can make some cash flow, although cash flow these days can be tough with insurance in coastal or southern Louisiana, but we're still doing it. I'm still finding ways to make those deals. And as long as those numbers will work, it's going to be a good long-term asset to hold for me. And then in the multifamily space, we do have an asset that I'm a GP on. We have 77 unit multifamily. It was a value add. So it's got to long-term play. It's not a get-rich-quick property, but it's going to be a long-term just cash flow machine. And so to me, I'm looking for those stable assets at this point.
Mm-hmm. What does manage right sound to you? When you think of manage right, how have you implemented that in your portfolio?
That's a current pain point for me, which we're working through. So another thing that's always changing. A year or two, I've always used management companies to manage my property. And as market conditions change and the real estate environment changes in your market, in our market in particular, insurance has gone skyrocket, is going through the roof. Management costs are getting more difficult to build in to some of the properties, even existing properties. So in order to retain some of those profits, I've actually now, everything here was taken back in-house with self-management. So managing is being the baby, or treating those properties like a baby, treating those residents like they're your customer that you are servicing every day. And you are trying to create that environment to where it's a seamless transition from buying a property to putting a resident in there and having them live in your property, hopefully for years. So it's a very, very, very hands-on process for me now.
And the finance right portion, what does the finance right portion mean to you?
That's another one that's very much changing. So financing for us here, getting good long-term debt. I'm very big on that. I've actually made some shifts lately with single-family properties, just putting them on some 30-year fixed-rate debt so that I don't have to have the worry of 5-year notes that are terming out and having to worry about the market cycle. And can I come back and get a new rate at this renewal that's going to still make the property cash flow like it should? So I've tried to shift a little bit more to giving up a little bit on the interest rate for the fixed long-term debt that I know will cash flow. So it just makes me sleep better a little bit at night. I can always refinance it if their rates are phenomenal for a few years.
Lane, do you mind if I recap what you just said? Because your story is such an amazing story. I love this progression. You start out buying deals. You don't really know buy right, manage right, finance right yet, like most of us, and you start buying these assets that may be a little bit older, but they cash flow more, but they're a little bit more work. Median income may be a little bit older, a little bit lower. The building may be a little bit older. There may be a little bit more deferred maintenance, but that's where you start. And that's where Jake and I started. As you start putting our assets on what we call that conveyor belt, and you start building more assets up, you start saying to yourself, I'm turning the portfolio. I've got a little more experience. Now I know what buy right is. Let me create a specific criteria for myself. And it's ever changing, as you said, because the market cycle is changing. So when you started out, it was easier and cheaper to buy older assets. It made more sense. As we got longer into the market cycle, those assets got more expensive and there's more work involved. So let me change my buy right criteria into something that's a little bit newer, right? And I love that. That's what we've been doing. And a lot of the Jake and Gino members are doing that. The manage right, I'm going to get you on a call with Jennifer Outland. She can help you out with the manage right. A lot of our students start maybe property managing themselves, then they move to third party, and a lot of them bring it back. It's a natural progression, and there's no right or wrong answer. We like to manage our own properties because we don't have to buy as many properties to make as much profit per unit. We can actually control it. But to some people, they may want to scale and get more assets. So it's going to be harder to bring property management in-house. Once again, it depends upon where you are in the journey. And the last pillar, the finance right. This is where the Jake and Gino community has shined. We don't believe in bridge debt, this 2-year debt when interest rates are low. And you see what's happened over the last couple of years, and now we're having problems. I think that's really important. So when you take buy right, manage right, finance right, you need to understand that it is constantly changing, keeping up with the market cycles and what's going on, and focusing on what works in your market and what your goals are. Would you like to add anything to that?
Yeah, I would just say that on the finance right, I think when we purchased our multifamily property into 2021, we locked it in on a 5-year. We looked at some 2-year stuff, but went ahead and locked it in on 5-year. We still got a couple years left on that. So it gives you a lot more runway. It just gives you more breathing room. It gives you more room for to help cash flow for your investors. Always go the long term if there's an option.
I love that, because right now you'd be giving the keys back to that property, or maybe you wouldn't, but right now you wouldn't be cash flowing because 3% is now probably 8%. So, and all the other expenses that have blown up. And that's the problem. I want people to listen to this. There's 2 ways you actually bankrupt yourself in real estate. You either run out of money, you don't have enough money budgeted for CapEx, or you run out of time. And thankfully, Lane was actually forward thinking and saying, you know what, we're not going to try to constrict ourselves on a 2-year or maybe a 3-year. We need more of a runway because we don't know what's going to happen the next couple of years. So, bro, kudos to you. Before you joined Jake and Gino, what were the pain points you were having? Because I see you wanted to scale into multifamily. What were you looking for, and how did Jake and Gino help you?
I just felt like I could understand the single family game, right? I had been doing that for a few years. I do my own marketing for that. I bring in my own leads. It's kind of a little system, a little machine I've got going. And I started getting opportunities to look at more commercial multifamily property. And I'm just sitting there one day trying to figure out, how do I underwrite this? How do I do the numbers? Am I doing this right? And I'm Googling hundreds of resources here, trying to just learn something or find some resource that's going to give me the magic wand, the magic answer. And it wasn't right there. It wasn't what I wanted. And so I said, look, I joined a mastermind group for my single family portfolio a few years ago, right? It has helped me immensely. It's given me a leg up, a push forward on what I was doing. And I became a believer in paying to get that information faster, be in the right room. And so I said, I want to go find some group, some mastermind, some course, some community, somewhere that's going to give me this opportunity in multifamily. And I started interviewing different companies or different opportunities, and just kept coming back to you guys with the genuineness. I just felt it was a very genuine culture, and said, I think I found a home. So jumped right in.
And when you jumped in, you just told me off camera before we recorded, you go to your first event, you leave the event, and then all of a sudden the 77-unit deal falls in your lap. I mean, how does it fall into your lap?
I wasted that. I totally would have lost that and wasted that if I had not just gone to, I believe it was in Knoxville, if I had just not been in Knoxville and learned how to buy a property, how to underwrite a property, templates on how to, like, even what to input where, simple things like that, that after you get going in the space, kind of rudimentary stuff, I wouldn't have known what to do, and I would have just froze up, let the opportunity go. But a friend of mine, I was actually calling him when I got back to give him an opportunity on a single family need in his backyard. He said, "Hey man, by the way, I just looked at something in your backyard, but I'm buying another multifamily in my town. You want the lead?" I said, "Absolutely. Let me go take a look at it," and just jumped in after that. Was still very scared, right? It was first property. I didn't want to mess anything up, but just dove in.
That is awesome. I'm listening to this right now. I've got a guy who's sold his fishing boat. His wife was skeptical. What are some of the things right now that I should be doing if I want to get into multifamily?
Got to be out there looking for opportunities. They're not going to come find you very often. That one fell in my lap by sheer coincidence. But if you're not out there searching for it, what you look for, what you seek is what you will find. What you think about every day and what you go over in your mind every day will become reality. So you've got to be consistent in going forward and seeking exactly what you want to find.
Lane, you'd probably be the perfect candidate to answer this question objectively. People are always comparing multifamily and single family. Can you give me the pros of single family and the cons of single family versus multifamily?
Oh, sure. There's a lot of answers to this, but I go over this very frequently in my own mind. I just can't give up doing the single families altogether, because just this week I bought yesterday actually I bought 2 single families that I'm going to have about $50,000 in equity in. They're going to cash flow. They're good little solid assets that I'm going to hold on to. I can get those pretty quickly. We can find many of those that close on several a month. So it's just a bunch of little more coins in the bucket, right? Where it's just, those are going and building the savings account for the future. Yes. Those are easy to do. There's lots of deals to go find doing that. Now, one deal is not going to make a massive change in your future, in your wealth, in your opportunity in the space. But being consistent with the real estate in the single family can definitely do that, right? In 4 years, I've gone from no properties and I'm about to be at 60 doors in another week or so. Lots of equity there. The things about that I think you lack, where in the multifamily space, you can take this and do that 60 doors in one deal. Like, there's no giving that up. You can have big chunks of equity that you can be a part of. You can work on super solid teams with other investors because it's a team sport, multifamily. You're working with teams, you're working with others, you're interacting, you're networking. That is going to grow everything you have and everything you want to do and grow you as a person. So that's hugely valuable, where I don't think we get that. I get that in the single family space.
Brother, I love that, because you know why? You've got 60 doors. If you want to sell them in 3 years and package them up and pull out all the equity and roll it into a bigger deal, you have that opportunity. Whereas somebody's sitting on the sidelines for the last 3 years saying, I'm going to wait. You're taking your pitch and you're hitting it, and you're giving yourself more opportunity in the future, because you can always sell one of those deals and make $50,000 or $40,000 and say, hey, I've got equity here. So congratulations to you. It doesn't have to be an if and one or the other. It could be yes and yes. We can be doing both, correct?
100%. I don't think I'll give up the single family space. Maybe I'll stop holding as many rentals in the future and just flip more just for extra cash flow. But I don't think I'll give it up altogether. I like a point you made there. I really like the flexibility that I have with my single family portfolio. I could sell one. I'm selling one tomorrow or Monday. We're closing on a rental that I had that I decided I didn't want to have that property anymore. I didn't have to make that decision with multiple other people. I just made the decision and did it. That's probably one of my only cons for multifamily space, right? You're on a team, so you have to work cohesively as a team, and maybe one person on the team has a change in the situation and needs out of the deal. It's a little bit harder to do that. But that's where it comes from: buying right, managing right, financing right. You don't need out of the deal if everything's going smooth. So get your team together and go make the deal happen.
See, the wonderful thing about what Lane has right now if you're listening to this is really, to me, it's extremely important. He has his 60 rentals here. He may have a maintenance tech or a property manager working those, and then he gets a multifamily for 50 or 60 units. That's his scale. That's his economies of scale. And he can keep people employed at that number of doors where you have single family homes, and you're creating an enduring business that way. You're creating multiple streams of income that way. And is it more work? I'm closing out a home on Monday. I can't believe all of the work it takes to close on one home. Insurance, alarm, electric, taxes, mortgage, brokers, going back, inspection, well, septic for one deal. I get it. But if I'm going to make 50 grand on one deal and that will allow me to continue to scale that portfolio, it's okay. I'll take that short-term pain. I'll build the base like Lane is doing. And then when I have these bigger opportunities, I have the infrastructure and I have the value, because Lane can go now and go on someone else's team and say, hey, I can help property manage and asset manage this deal because I've got a team here and I can save us on this bigger asset because I've got guys who can do flooring. I got guys who can do some kind of, HVAC or whatever that looks like, because I've got it on this end. Where are you going to be 3 to 5 years? What is your goals in the next 3 to 5 years?
Oh man, that's a tough one. I'm the shiny object person sometimes. I like to focus on new things. So 3 to 5 years is very hard for me, but I do know this. I want to continue growing my portfolio. I want to continue moving more towards the multifamily. I really love mobile home park space as well, looking at opportunities there. I want to continue there, but I want to get the single family system more automated to where I'm not in it, and give me that space to go there. But I'm also not the person that needs to have, 5,000 doors. I don't think I want to be there. Maybe my mindset changes and I want to be there at some point. But as of right now, I'm more of the mindset that, hey, I want to continue to grow a little bit more. I want to get that cash flow up to a better level that I really like and feel really comfortable with. Let's start paying down a little bit of the debt. I don't think I ever want to get rid of all debt, but let's get it down to a less leveraged number that if the world just ends in disaster, I'm not in a horrible situation if I have to dump property. And then just create more freedom at home. I want more time with the kids and less stress that I'm creating for myself with pushing hard every day.
I love that. Lane, where can the listeners get a hold of you? Because I'm going to wrap up the show, but where can they reach out to you? If you want to give them a cell phone, if you want to give them your email address, if you have a website, please share that all with them.
Absolutely. So you can find me. I'm on Facebook, Lane Babin. It's pretty easy. Lane at selltobpp.com, selltobpp.com. Give me a shout. Come find me. Let's go connect.
Cell number? You want to throw it on there?
Oh, yeah, absolutely. You can call me anytime. 337-602-8881. 337-602-8881.
Call him anytime. That is music to my ears. So we have a young Lane Babin. He's sitting there with his daughter, his 1-year-old, bath time. And it just hits him. He reads Rich Dad, Poor Dad. And he's saying to himself, man, I wish I had been doing this 15 years ago. Where the hell have I been? But instead of complaining and sitting there and being a victim, Lane says to himself, well, why not start today? And all of a sudden, in the next 4 or 5 months, he's got his earbuds playing. He's all over the house. He's listening to podcasts. He's reading books. And then he finally decides to say to his wife, I want to invest in real estate. And his wife is like, Lane, you are not sinking our savings, bro. You are just not going to touch our money. Lane says, well, where there's a will, there is a way. Fishing boat, I love you. I mean, you are just part of my DNA, but I'm going to have to part ways. Lane sells the fishing boat, everybody. That's his baby. And he goes and he does his first deal and he makes a ton of money on his first deal. And he's like, I am convinced. How do I get more of this? From 0 properties to over 60 today. General partnership of 77 units on a multifamily, leaving his job within 4 years of actually getting into real estate. Where there's a will, there's a way. Mr. Lane Babin, any final words, my friend?
I would tell you, just be consistent, be determined. And the one point that changed the trajectory for me was when my wife fully committed and told me she was on board with what I wanted to do. And she gave me the freedom to quit my job and jump in full time. So that was the biggest change for me ever.
Wow. Lane, I want to thank you for being an amazing guest on Movers and Shakers show. It's to me, every time I do these shows, I don't want to say I get emotional, but I do, because these stories are all amazing. There is no one right way to do real estate. Just go out there and find your path. If somebody's telling you single families aren't the way to go, that's not right for them. But Lane, once again, thanks for being on the show. Awesome show. And he gave the cell number. Go out there and give him a call if you want to learn how to get into multifamily. Thanks, Lane. Take care, everybody.
Thank you so much, Gino. Appreciate your time.